There were two markets trading today, stacked one on top of the other, and the one you could watch was the smaller story. On the top layer, the part your screen showed you, this was a clean rebound. The S&P 500 up 1% and 2/3 to 7438. The Nasdaq up 3 1/3, semiconductors up 9%, and the fear gauge crushed 17% lower. Most of Wednesday's Fed day drop erased in a session. This is the AlgoIndex market close, and it is Thursday, July 30th. Now the layer underneath, the one that actually did the lifting, the largest single engine of today's reclaim, was not somebody deciding stocks were cheap. It was the calendar going empty. With the Federal Reserve decision behind us from yesterday, and this morning's inflation number now printed, the two biggest unknowns on the board both cleared inside 24 hours. And when unknowns clear, the insurance priced into options gets ripped out. Volatility fell off a cliff, and that fall all by itself forces a specific kind of dealer buying. That mechanical buy, plus a violent squeeze in the chip names, is most of what you saw. And on both layers, the same wall stood in the way all day. 3 questions run this show, and I will answer them in order. 1. If the buying was mechanical, how much of today do we actually get to keep? 2. Which single options ticket, flagged 3 days ago, turned about 250% today? And 3. What is the one price that decides whether this reclaim is a turn or a bounce? Stay for the third, because it is sitting 1 point above where we closed. Here are the closing marks. The S&P 500 settled near 7438, higher by 1% and 2/3, 121 points, on a day that ran 104 basis points high to low. The Nasdaq added 3 1/3%, the stronger index by a wide margin, as the chip group rallied about 9%. The fear gauge fell to 17 and change, down more than 17%, and its own companion measure, the volatility of volatility, dropped 14. Positioning stayed defensive by the raw counts, more puts than calls traded, about 1.28 to 1 by volume, but the price of protection, its rank against the past year, sits near the low end, at about 21%. That is the tell the scoreboard hands you. The fear did not leave because traders got brave, it left because the events they feared are now in the past. Slow down here, because 3 forces stacked up today, and only one of them was actually new money. Start with what led. Semiconductors and the large cap technology names carried the entire move. The chip group rose about 9%. 2 memory names jumped roughly 18 and 26%. And the biggest software company you own climbed about 16% on results. Its strongest single day since 2008, adding something near $500 billion of market value on its own. Now the force that did the quiet heavy lifting. And this is the part your chart cannot show you. With the Fed out of the way and this morning's inflation reading in hand, the event risk that had been baked into option prices got removed. And fixed strike volatility dropped hard, as much as 6 points across the curve. When that priced-in volatility collapses, dealers who are positioned against it are mechanically forced to buy the underlying to stay balanced. It is not an opinion, it is a hedge adjusting, and it lands as steady demand under the market. Our own morning read had flagged exactly this. Third, look at how the demand was built, because the shape matters. Real-time dealer hedging came in net positive by about $7 billion. But pull it apart, and it is not a stampede into calls. It is roughly $3 billion of selling same-day puts, a wager that the calm holds, sitting next to $4 billion of buying longer-dated calls. That is a market leaning forward, not lunging. And underneath all of it, dealers are still carrying negative gamma, which is why a rally this size still traveled 104 basis points and swung both ways to get there. One honest callback, because we keep score in this seat. Last night this show told you to stop watching the index and start watching the long-end yield, since it had led stocks straight down into the Fed. Today, it worked in reverse. The long end cooled, the 10-year easing back toward 4 2/3%. And stocks came right back up alongside it. Same lever, opposite direction. Now put the real 5-minute bars up, because the entire session organizes around one price. The cash index gapped up at the open to about 73.90 on the cool inflation print, then spent the morning giving it back, grinding to the low of the day near 73.71 at 11:30. From there, It turned and simply trended, higher bar after higher bar all afternoon, until 3:20, when it printed the high of the session, 74.48 and 3/4. 74.50 to within a point and a quarter is the pivot our end-of-day options read has flagged as the divide between a bullish and a bearish market. The same line that has capped every attempt for a week. Price walked right into it and could not get through, then eased into the close at 74.38, finishing just underneath. So the clean map is this. Overhead, 74.50 is the wall, and above it, 7,500 is the next serious shelf and the monthly options magnet. Below, the gamma flip line at 73.84 is the switch from cushion to chase. Then, today's low at 73.71, and under that, the primary support shelf at 7,300. Here is the deep dive I promised, and it is the cleanest example of the day of information you could have acted on. 3 sessions ago, on Monday, the flow data flagged something specific. Roughly 10,000 call options on the largest software company. September strikes, bought to open. Nothing about that Monday told you it would work this week. Then today the stock reported, gapped, and ran about 16%, more than twice the 6% move the options market had priced for it. And because dealers were short gamma into that move, the rally fed on itself, from around 390 up to 450. Those September calls, bought for roughly $10, traded near 35 today. That is about 250% on a position that was sitting in the data in plain sight on Monday. The lesson is not to chase it now. The move has happened. The lesson is that the same flow record that flagged that ticket is public, and it speaks before the move, not after. Put a frame around the fear, because tonight it is unusually cheap, and that cuts 2 ways. The fear gauge fell more than 17%, its companion measure fell 14%, and fixed strike volatility came down 1 to 6 points across the curve. Read plainly, that is not a market that discovered calm. It is a market that stopped paying for 2 events that are now over. By rank, protection now sits near the low end of its year, around 21%. Protection this cheap is either a gift or a trap, and I am not going to hand you a verdict, because the honest read tonight is that both are live at once. What I can tell you is the arithmetic. Today still traveled about 1.5 times the move the options market had priced for it, which is what a negative gamma market does, even on an up day. 2 wins, no losses, and 2 trades that came to nothing on our desk today. And the nothing is the part worth your time. Both automated longs fired within seconds of each other in the first half hour, and both reached first target. One on the index side from 74.31, one on the technology side hitting its mark inside 4 minutes. Neither was anywhere near the morning weakness that followed. The 2 harder trades were counter-trend, attempts to sell into the afternoon strength, and both were closed flat within minutes. Here is the honest lesson in that. The morning short we cut almost instantly for a small gain, and the market then fell another 15 points without us. The afternoon feign we also closed fast, and that time it saved us. Price ran 18 points past that entry into the close. Same instinct, opposite outcomes, and the only difference was context. One fade was running with the trend, the other was standing in front of it. The map earned the day, not the hunch. It named 74.60 as the line sellers were defending, and price honored it for 2 hours. What it did not call was the late acceptance above it. Tomorrow is quieter on paper and trickier in practice. Friday is month end, which drags in rebalancing flows that move price for reasons that have nothing to do with the news. The US data board is light, no first-tier release, just a couple of energy and pharma names reporting early. The real overnight variable sits in Tokyo. The Bank of Japan decides on rates late tonight, with the yen pinned near 160 to the dollar, and Japanese officials openly warning it is too weak. So the tone for Friday may well be set before any of us are awake. Into that, 2 of the largest companies in the market reported after today's bell, one beating cleanly but with soft spots in services in China, the other beating on cloud but guiding next quarter light, and futures took both in stride, pushing a little higher and notably trading back above 74.50 after hours. Here's the map that drops into. Pulling up, the 1-day and monthly options magnets sit at 74.50 and 7,500, both a gentle pull higher. Pulling the other way, that pocket of negative positioning still reaches the 7,000 area and would speed up any break. The bias turns genuinely constructive only if 74.50 flips from ceiling to underfoot and holds. It tips back to the sellers on a decisive break under 7,300, with dealers sitting short gamma below it. And the one thing today does not settle, whether this was real demand or just the pressure releasing the moment 2 big events cleared. with month-end and a still jumpy market able to hand a piece of it back. 2 links and a room to talk it through before you go. Our free trading journal opens to anyone at members.algoindex.com/auth/signup, and it grades any trade you log against the quotes that were genuinely live the second you entered. The level scorecard we keep stays public at algoindex.com/tools/gamma level accuracy. Win or lose, so you can judge it for yourself. The full write-up for tonight is posted at algoindex.com/blog, and the community works through it together over on Discord. Now, where to put your attention? The first real vote on Friday is cast overnight in Tokyo, long before the opening bell. So watch the yen and the Bank of Japan before you watch anything here. After that, it comes down to one question. Can this market finally close above 74.50 and hold it? Clear that line, and the reclaim becomes a turn. Fail it again, and today was a bounce. We will be right here to watch it with you.